You're listening to Indications by the Conference Board.
Hello, I'm Bart van Ark and welcome to Indications. I'm Chief Economist at the Conference Board, and I'm joined here today by my colleague Denise Dahlhoff, who is Senior Researcher on Consumption and Consumers. Welcome, Denise.
Thank you so much.
And today we're going to talk about our quarterly release of our Global Consumer Confidence Index, which we just released for the third quarter of 2019. This is an index we do in collaboration with Nielsen. And it's one of our latest additions to our portfolio of economic indicators. And what's unique about this one is that we actually measure consumer confidence and other topics 4 times a year in 64 countries at the same point in time during the quarter. So we have 500 households per country. It's an internet-based survey. So we survey about 32,000 households in total. So that's quite a lot to learn about what consumers in the world are thinking. Denise, can you explain sort of what components the index consists of?
Sure. So since we're interested in economic consumer confidence, we are looking at 2 key variables that people care about. One is jobs. What do people think about job prospects in the next 12 months? And also, how do they think about their personal financial situation over the next 12 months? And then as a third component, we also want to know how people see the current situation in terms of spending money on items and services. So that's the third question. So it's jobs, personal financial situation, and is it a good time to spend? And in addition to this economic consumer confidence, we ask additional questions to get a better understanding where people stand, economically. For example, what kinds of product categories do they spend their disposable money on? Have they started to save? And if so, what kinds of actions have they taken to save? For example, like use your car less often, try to not or save on gas and electricity, but also cut back on buying new clothes or delay replacing, major appliances or delaying tech purchases. So those kinds of questions give us a better flavor of where consumers' mindset is in terms of spending.
Yeah, and I think that additional detail is really important, because if you look at the high level of just the index as a whole, it doesn't change very rapidly, certainly not globally. You've got 64 countries, so this is kind of leveling out. And indeed, what we see in the third quarter for 2019 is that compared to the second quarter, the index actually has remained unchanged at a global level. It stands at 107, so if it is above 100, it means we have more positive consumers than pessimistic consumers, so that's good news. There's been a little bit of movement, of course, underlying in different countries, and we can definitely talk a little bit about that. But I think it's these additional questions about what are your biggest concerns and what would you spend your money on or not on in case you get in problems. That will help us a little bit more to sort of check the temperature of the consumers, right?
Mm-hmm, exactly. And actually, one other question that I didn't mention before is people's concerns. And they range from economic ones like the economy, job security, but also personal ones, even like work-life balance, your children's education, your parents' well-being, and also political things like terrorism or, political instability. So it gives you a better flavor of, where people even stand psychologically.
Yeah, and there's actually one cool one, or not cool actually, it's the one about global warming. We ask about that, and actually that's a big mover this quarter, right? I mean, we've seen the concerns about global warming come up quite a bit, and I think it's around the world, right?
Yeah, that's absolutely true. And if you look at all the concerns, that's the one that has been standing out for the last several quarters in terms of seeing a very clear pattern. That's, others go up and down, they don't move as much. But concern about global warming has been going up consistently over time now and in all regions of the world.
Yeah, and maybe we can talk a little bit more about that. But let's go back a little bit to the headlines at the moment. As I said, globally, it's unchanged. But there are differences between regions. First of all, in terms of levels, just the level of consumer confidence, we still find that the most optimistic consumers in the world are based here in North America, particularly in the United States, but also in Canada and in Asia Pacific. Those are the areas where we really find the most optimistic consumers. In both cases, in the United States, it's sort sort of leveled off a little bit. Actually declined 1 point, but that's not a big deal. Some of the large Asian countries, India, China, Indonesia, they all lost 1 point, but again, that's not a very big number. In Europe, actually, the numbers are somewhat better. Again, not a lot of change at the aggregate level, but we have seen some countries actually coming back up, and 2 countries particularly that we're concerned about in Europe very much at the moment, the UK and Germany. They both lost a lot in previous quarters. They came a little bit back in the third quarter, and that may perhaps mean that the consumer, at least, seems to be stabilizing a little bit, getting a little bit more used to the fact that the world is looking somewhat differently. And then perhaps later we can talk a little bit about Latin America. There's a lot of volatility there, of course, and we've seen some countries improve a little bit, whereas some other countries actually have been showing fairly large declines. So, for example, Brazil, which hasn't been doing very well, or Mexico, which hasn't been doing very well, has actually picked up a little. But then surprisingly, some other countries, Venezuela, perhaps not so surprisingly, but Peru, for example, surprisingly has lost 14 points. And that's a very, very big number, probably related to political instability. And I think you can guess which other market in the world lost as many points as Peru did.
It's exactly at the other end of the world in Hong Kong, where, of course, to no surprise, with all the protests going on, that was to be expected.
Right. I mean, that's a market, obviously where we see major concerns. But China, as an overall market, indeed lost just 1 point and is still at relatively high levels. So, any more insights, Denise, on sort of the color that you can give across countries, or maybe let's talk a little bit about these underlying trends in, for example, job prospects and personal finances and spending intentions.
Mm-hmm. So maybe going to Europe, which I found this quarter particularly interesting. We saw, Europe is always a little bit, lower than other regions, but that also has cultural reasons. But the interesting thing is really looking at developments over time. And so this time we saw a little bit of an improvement, especially in the Europe area. We look at both the Euro area as well as Europe. And so Europe has actually improved a little bit this quarter. And what we see is that especially people's perception on whether it's a good time to spend has improved. Which,
and just to be clear, Europe includes UK, but also countries like Turkey and Russia are part of Europe. So
Ukraine,
it's a very broad
exactly.
definition of Europe, right?
Yes. So that's to be, it's a colorful collection of countries that go beyond the Euro area. But actually, many of those countries have gained in confidence. Like you mentioned, Russia, Ukraine, Slovenia, Bulgaria, all those kinds of countries have increased, as well as from the Euro area, Greece has increased a lot. On the other hand, we have seen drops in the Euro area as well from, one of the larger countries, Spain, has dropped, especially because of weakening, prospects on the job situation, as well as some political instability, as well as the Netherlands.
Yeah. There are some countries like the Netherlands, surprisingly, lost a lot. Although perhaps not surprisingly. I mean, they're very exposed to what is happening in the global economy. These are small countries, and they obviously suffer a bit from that. But it has been a large decline. But what I find interesting about Europe, you also see it in North America, and I think that's where the real sort of underlying dynamics becomes clear, is that even though these headline numbers don't change a lot, there seems to be a bit more concern about job prospects. So, again, we're not sort of raising the alarm bell and say, everybody's worried about losing their job. But, I think their concern about whether there will still be as many jobs available as currently the case, we see in some European countries, but also in the case of the US, to begin to decline a little bit, right?
That's softening actually in multiple spots around the world. So, which is, thinking of our, 3 components, jobs is one of the 3 key ones. That's, of course, a concern and something to look for. But actually on the bright side, people's belief in markets is also, we saw this quarter that people's investments into stocks and mutual funds, for example, including Europe, have gone up, which shows that people have some faith in the markets. as well as, if you take some risk as opposed to, putting your savings or the money that you have available into like a safer savings account, that shows that people have some confidence.
Yeah,
of course,
and that's also reflected. I mean, that point, people put their money in stocks, but also they still think at this moment is a good time to spend, right? Which is the third underlying question for the index as a whole. So again, North America, but also in Europe, despite somewhat bigger concern about where we're going with the job market, they still think this is a good time to spend.
Exactly. So it's I think overall for companies, especially looking at Europe, that development was quite positive. Of course, you have to differentiate between markets, and we see developments going like in somewhat different directions now, but overall, fairly positive news out of that region.
So one thing I've been wondering about is, and we obviously talk a lot about that at the conference board, is to what extent this trade dispute and all the chatter on rising tariffs and the fact that this may lead to increased prices, we don't really think that the consumer is going to be impacted much by that. At least at this point, I don't think they're going to be much impacted by that, right?
Consumers are probably less forward-looking than executives. Of course, as an executive, you think way ahead and much more about these things. For many consumers, they are, hit more by that as they enter the store and see, different prices, for example, because of trade disputes, and now there are higher levies on certain items. Or when, they hear within their company about any changes in terms of employment.
Yeah, and neither of that we really see. I mean, most companies are still, if they can, they will pass it on to the customer, but only if they think the customer won't feel too much of the pain. But usually down the supply chain, somebody's kind of eating it up, and in the end, it will not really translate itself into higher prices. So I think that concern isn't there right now. And to your point, as long as, business executives are not telling their people that they may lose their job because of this, the consumer will basically interpret this as a lot of noise. What I think we should be most worried about if this becomes a drumbeat of negative news, right? If it goes on, and I think that's a bit of a concern with this trade debates. If we can't put this to bed at some point in time, then the consumer may get more concerned and think, well, maybe in the end I am going to be impacted. So we don't see it yet, but I do think it's something that we need to watch very carefully. And it's true, I mean, the difference between consumer confidence being very high and business confidence, which we also measure at the conference board, I mean, that gap is unusually large. I mean, business confidence is very, very low. And that indeed has to do, to your point, that businesses are much more sensitive to this whole trade dispute than consumers are.
What's also really interesting is studies have shown most recently the Edelman Trust Barometer that consumers are trusting companies way more than other institutions such as, the government and media. And so, to your point about the chatter, consumers trust their employer particularly. So if there was talk from the employer talking about a bad economy, so maybe that would actually have a bigger impact than just hearing from the press.
Yeah, no, I think that's definitely a factor as well. The thing that does concern me in this month's index, changing the topic a little bit, is the number of countries that are actually beginning to see a decline, right? Because even though this aggregate number is unchanged, and even though the numbers for the major regions that we briefly discussed remains unchanged, actually of the 64 countries in the index, 33 are actually seeing a decline. And that is more than in the previous quarter. Only 29 were seeing a decline. And this is somewhat spread across emerging markets and mature economies. So many of those are probably smaller economies. Again, those are maybe more impacted with what's happening in the global world around us. But I do think that's an important factor to watch if you just see more countries out of the 64, getting more negative.
Certainly. The only thing that also to consider is that consumer confidence has been at a very high level for a while now. So, eventually it had to, reach a plateau. And so we might be seeing maybe some, adjustment as well. But for sure, especially thinking of concerns like job security and other, like generally about the economy, that's that's something to watch out for.
Yeah. So let's wrap up with what consumers actually spend their money on. And we have a bunch of questions there about, if your budget changes, what kind of changes in spending intentions do you have? What kind of movements do we see there?
So I already mentioned the stocks and mutual funds, which we have seen actually in the biggest regions, North America, Asia Pacific, as well as Europe, go up. We also saw some more putting of disposable income into retirement funds, except for in Europe and Latin America, which might have to do with their pension systems. But so that was also an interesting pattern to see across the world. Then the clothing category is always very interesting. But what we have seen is like a little bit of a softening in terms of spending on new clothes, which can have various reasons. It could be slightly seasonal. It could also be, some structural changes that people are just moving more from material goods to services and experiences. But in some countries, we have actually seen a pretty continuous decline in buying new clothes. So that's something to look out for as well. And then, of course, there are new models for buying clothing, like rentals and secondhand. And so, that market is probably in a lot of change. Also talking about sustainability and, finding new business models and so forth. And the other good news is for buying new tech. We saw some softening in the last quarter, and that has actually recovered a little bit again. So that's generally good news.
So let's wrap up with where we started, this global warming thing, which was a big mover here. So apparently these climate protests and all the attention it's got at the UN meetings here in New York last month, that apparently has impacted really on the consumer. Now, how do you think, you mentioned the clothing issue just a second ago, what other areas do you think that greater concerns on global warming may begin to influence the consumer and their behavior?
Yeah, I think this is becoming a new mindset for consumers. I think they are looking at the world through that lens more and more. And I think they expect in their interactions with businesses, regardless of what category it is, be it new clothes, technology, going on vacation, just grabbing something to eat, people are looking more and more at that. And I think it takes more investments from companies probably to think about what are their consumers expecting and what can companies realistically do, while also thinking of the profitability of their businesses and long-term sustainability, including financially.
Yeah, it seems to me it's not anymore a nice thing to have to be green as a company, or you got to be really serious about it and you have to show it, right? It's not, you have to walk the talk.
Yes, and it can't be just lip service. I think consumers are looking through that. It has to be something that is also tied to the brand positioning and that is authentic and that is real.
Yeah. So in summary, consumers are still pretty positive around the world. They're actually the ones that may actually are our primary line of defense against recession. So we hope that will stay in there and remain positive. We are a little bit concerned when we look, into the details, and we need to check that very carefully. But for any kind of business that is working on consumer goods, count on the consumer for now, give them the products and services they need, and that might actually help us to keep things going here. So this was our review of our quarterly consumer confidence index that we do in collaboration with Nielsen. Thank you, Denise, for helping us today again to explain and understand what's in this index. This was an episode of Indications. If you're interested in more content from the Conference Board, please subscribe to conferenceboard.org/podcast, or you can go to iTunes, Google Play, Stitcher, Spotify, and other providers that are providing those podcasts. Thank you for joining. I'm Bart van Ark at the Conference Board.
This has been Indications from the Conference Board.